Alright guys, welcome to the bridge. We have some good news, some green on the screen and a bit of a bounce. You already see people screaming bull run as soon as we get a 10% move, but we must remain prudent. We have a bounce on Bitcoin and some life in the altcoins. That's satisfying, but nothing to get too excited about yet. Solana went from 120 back to like 35, 40. These are early signs of interesting developments, but they will take time to settle in. And until this thing doesn't go up, I don't turn bullish. I will explain you what it is. Okay, the Fed's balance sheet is increasing for the first time in a very long while. We are currently in a transition period for monetary policy. Rate cuts and the end of QT are a reality, which are positive signals. Right now, there is no sign of official QE from the Fed. However, QE is not the only way to stimulate liquidity, and that's really important. Basically, there are three ways to stimulate liquidity: conventional QE, not QE, treasury QE. The Fed and the governments use several mechanisms to inject money. You have the conventional QE, where the central bank basically buys assets. But the past few years, what has really driven liquidity lately and what will continue to do so is not conventional QE. It is what we call not QE. This is what you really need to watch. These are basically mechanisms where they claim, okay, no, don't worry, it's not QE, but the effects are very similar. We are right now in the middle of it. QT has stopped, rates are falling, and the Fed has been buying back 40 billion in T-bills monthly since December. This 40 billion cap is a constant positive. QE is good for liquidity, it's good for the markets, and it's not really good for the economy. It's kind of neutral. These are really good signs, but we should not get too excited until global liquidity goes up again. Look at the yellow chart. It's global liquidity variation. Whenever it goes up, Bitcoin follows. Every time, look at that. It goes up, Bitcoin follows. And if we reverse it, Bitcoin went up, global liquidity variation went up like 3 months before, because liquidity takes 70 days in average to flow into Bitcoin. And currently we are in a kind of stagflation in global liquidity variation. I want to see this goes up and then Bitcoin will rise. Not before, and it takes time. This period is basically like 100 plus days. Until I don't see this kind of move, I consider nothing massive could really happen on Bitcoin and cryptos. But, as I said, there are signals. Trump announced as well that he would inject liquidity into MBS to support home loans. Essentially, Trump is pressuring the central bank to cut rates. Since the Fed isn't moving at his preferred pace, he decided to create his own version of QE. If you wonder how does it works, it's kind of simple. You have large government-sponsored entities that buy these MBS, which are bundles of mortgage loans, okay? When you buy 200 billion worth of MBS, their prices go up, causing their yields to drop, because prices and yield are closely linked. Consequently, mortgage rates for the public decrease. If rates drop like from 4 to let's say 3.5%, then more credit is created. Credit is what creates liquidity ex nihilo. This is how you stimulate the market without needing the Fed's direct approval. We are talking about 200 billion in the 10 trillion market. It is symbolic rather than massive, but it shows the direction. The housing market is a primary source of liquidity. These buybacks, combined with the Fed's T-bill purchases, are interesting for the medium term, but again, don't get overexcited. This will not trigger a bull run in the next few weeks. These are pieces of a puzzle that will show their full effect when the monetary pivot is fully established. Liquidity is currently stagnating in the form of stagflation, but the DXY remains below 100, which is a critical support level. Historically, bear market starts when the dollar breaks out to the upside. For now, we are below that level, but it requires monitoring. I don't really want to predict short-term moves. We know we have a key zone between 80,000 and 110, where the price will likely oscillate. Market makers have every interest in liquidating both sides in that range, and until macro conditions fully align, we won't have a clear indicator of a cycle restart. However, the jobs report from January 9 was a positive surprise. The unrate dropped to 4.4%. I have realized lately how massive the correlation was between unemployment and Bitcoin. Usually when the unrate chart spikes, Bitcoin is correcting, and when it's in kind of a range, Bitcoin goes up. So it really matters. If we are breaking the upward trend in unemployment, that's a very positive sign, especially with the liquidity stimulus coming in. Okay guys, a quick update on this week's trade. We had a perfect 100% win rate on altcoin shorts. I made 4 trades and all of them were positive. That's a really good sign. Just a reminder of my strategy. I built an indicator called the dump detector, which helps identify overbought altcoins that have posted excessive performance relative to their fundamentals. I'm chasing these altcoins. These altcoins tend to correct, and my goal is to short that correction. The portfolio is currently up 52% over the past 3 months. The objective is to show you the result with full transparency week after week. And if you want more information about my short position, you can subscribe to the newsletter. Everything is free. Alright guys, very good signals. Don't get overexcited and don't try to predict short-term movement. And don't try to over-predict short-term move. Thank you very much. I hope my French accent wasn't a big problem. I'm working on it, but it's difficult, guys. I hope you appreciate. I hope you liked. Don't forget to subscribe, and thank you for watching, guys.